Thanks. Hi everyone, welcome to this cuEngage Q&A session with the CEO of Concentra Bank in Canada and the former union CEO Don Coulter. So my name is Amina Ahmed. I am the Junior Project Implementation Consultant here at Wellington. There will be an opportunity to ask questions at the end, so if I could ask everyone to please keep their mics muted and pop any questions into the chat bar for the meantime. Also, if everyone could keep their cameras off for the duration of this session as well, it would make it easier for everyone to focus onto the speakers. So this session is a really unique opportunity to hear from someone who is very experienced in the Canadian credit union market. So without further ado, I will pass you over to our Managing Director, Declan Colfer, who will be hosting this session.
Super. Thanks, Amina. So folks, just want to welcome everybody to the this latest session of cuEngage. I want to thank all the work that Emma and Rebecca have put into setting this up. We have a really great opportunity today to meet with Don Coulter, who is, as Amina just mentioned, is got a lot of experience working with credit unions in the Canadian market. As we all know, I think both the Irish and UK credit union markets, we look quite a lot across at what's happening in Canada because they tend to be quite kind of leading lights in many ways of what's happening in the movement. So, looking forward to hearing what Don has to say, and maybe we'll just kick off by asking Don to give us a little bit of a background in terms of, the roles that you've had, and particularly I suppose as a credit union CEO.
Yeah, thanks so much, Declan. Good day to you. Good day to everyone. Really delighted and honored to be with you today. I'll just do an initial sound check. Can you hear me okay, Declan?
Yeah, I can hear you fine. Thanks, Don.
Fantastic. So let me tell you just a little bit about my background and then what I do now in the credit union system and professionally. So I started out doing my chartered accountancy designation with one of the big four global accounting firms. And then I moved after that into a large pension fund in Canada, the Ontario Teachers Pension Fund, which is a $250 billion Canadian pension fund that manages all kinds of active asset classes, private equity, publicly traded securities, infrastructure, big tracts of timberlands all around the world, things like that. Then I moved into banking. I will say when I was doing my CA, Chartered Accountancy designation, that was one of my first exposures to the credit union system because I used to audit a lot of the large credit unions in Canada, and I also did consulting engagements. From the pension fund, I went into banking, so I worked with one of Canada's big 5 banks. We're dominated in Canada by these large banks that have huge market share. So I worked around the world in all aspects of banking with that bank. It was called CIBC, Canadian Imperial Bank of Commerce. And then that took me to the Caribbean, where I was the CFO of the entire Caribbean region for Caribbean and Latin America and living in Barbados. And then I made a switch and I joined Coast Capital Savings Credit Union in Vancouver, British Columbia, where I was the CFO. I spent about a decade at that organization, half of it as the CFO, and then I was promoted to become the CEO. And so we're the largest credit union in Canada by membership. We had about 600,000 members, $20 billion Canadian in assets. And so when I was the CEO, I also sat on a number of national credit union leadership committees, including the Canada Credit Union Association, which is the trade association for Canada's credit unions. I was on a number of different working committees, different government relations initiatives with the provincial governments and also the federal government. And then from there, a little over 3 years ago, I moved to Concentra Bank, where I'm now the president and CEO. And so what is Concentra Bank? So we're a unique entity. So we're a federally regulated bank in Canada, but we are 100% owned by the credit union system. And so we have a big role in providing wholesale financial services to Canada's credit union system, which is about 240 credit unions comprising in excess of 5 million members. And those are personal members and then business members. Probably about 10% of the membership of credit unions in Canada are business owners. And so that 5 million and 240 credit unions comprise about $250 billion Canadian in assets. So it's a big deal. It's a big system. And So that's a little bit about my background. Get into a lot of depth in terms of what's happening in the credit union system now, Declan, in terms of technology and digital and wealth management, all the different things that we're doing.
Yeah. Well, look, thanks for that, Don. Could you maybe just, we kind of touched on it there a little bit, could you talk a little bit about the kind of the Canadian market itself, and particularly interested in hearing about the business customers that you have? Typically over here, the majority are personal members, but obviously, all credit unions at the moment are looking at ways of bringing in additional revenues or different channels. So I'd be quite interested to hear about just generally about the Canadian market. Are any key points you think that are worth calling out, but focus maybe on the business side of things as well?
Yeah, for sure. So when you look at the business segment in Canada, there's kind of at a very high level, there's kind of three segments. There's small business, which can be you're your only employee working from home. There's kind of the mid-market, which is, significant, important businesses, often with up to 200 employees and, profits of 5 million to 20 million per year. That's really kind of a big driver of the Canadian gross domestic product. And then there's our big corporate, top 50 companies as well. So there's those three segments. And so the credit union system is comprised of kind of small, medium, and large credit unions. The larger ones are more confident in doing more commercial lending because commercial lending tends to be more complicated. It's higher risk. You have to really know what you're doing. And so, the bigger credit unions will be doing more real estate finance with bigger companies. The Canadian market, Canadian economy, I guess, in the last 10 or 15 years has really been, I wouldn't say dominated by real estate, but it's a big part of our economy. We're seeing a lot of population growth, a lot of immigration. So there's a lot of building of homes and construction projects. So a number of the bigger credit unions will be doing construction finance. They don't do it by themselves usually, because usually you want to diversify the risk. So they'll do it with other financial institutions as part of a syndicate. And that could be other credit unions, or it could be banks as well. So they partner with banks. So that's kind of a bigger place where credit unions are playing. Traditionally, the credit unions have a very large share of the small business segment in Canada. And there's a few reasons for that. I think that, first of all, credit unions consistently in Canada every year, no matter what sort of third-party research survey it is, come out number one in terms of customer service. Mm-hmm. So Canadians, as they're surveyed on who do you bank with, is it Royal Bank of Canada or CIBC, or is it Van City or Coast Capital Savings? Consistently, the service is considered the best at credit unions. So that's reason number one.
It's the same here actually as well.
Okay.
Which is great.
Not surprised.
Yeah.
And so the other thing is the branch network and the community. So the localness, the regional, aspect that credit unions have, there's much more connection, I think, than there can be, depending on what part of the country you're at. But there could be a lot more connection with your local credit union. It's a person that's in your neighborhood or in your region, and so a lot of people like that for sure. And that's another reason as well. I think in that segment of smaller business, what credit unions traditionally have done, though, is they've provided, core banking services, transaction services, payments, and things like that, and deposits. They've taken a lot of deposits, but they haven't necessarily had the gumption or the capacity to lend, because lending to a small business can be riskier. In Canada, I'm sure it's probably the same in Ireland. The success rate of small businesses is not 100%.
Sure.
It's quite a bit less than that, and so you're going to have failures. And so, with a conservative risk appetite that most of our credit unions have, they've shied away from lending at that segment, which has been a problem because then others have moved into that space. So what's happened is a real change in the last decade in terms of the players in our financial marketplace. So we're seeing a lot of fintechs, a lot of alternative lenders and private lenders. And what some credit unions have done is they've started to partner with these types of entities, fintechs and different private lenders who have the capability. They maybe have the digital lending automation methodologies and technologies to lend to small businesses. So we are now starting to see proliferation more lending to these small businesses where credit unions are playing, which is, I think, very, very good. There's entities like Lendified, which is just one example of one fintech that credit unions partner with. So I said there's three segments, and then there's the middle market as well. And middle market businesses tend to have more needs. So they have, lending. They have desire for credit, for deposits and cash management, but they also are expanding. So they need things like leverage finance, mezzanine debt, subordinated debt. They'll need, often the entrepreneur has a blur between their personal life and their business life, and so they need wealth management capabilities as well. So a few kind of progressive leading credit unions will be getting in that space as well and offering sub debt and mezzanine, which is higher leverage debt. If you know how to do it right, though, it can be quite lucrative. The yields are higher, and the market share potential is quite a bit bigger for sure. So business banking, commercial banking, business banking is an area of strength for the credit union system. Although not all of the segments are covered, fully. Certainly, the large corporate lending isn't done very much by credit unions.
Super, thanks, Don. And one of the challenges that credit unions in Ireland have had over the last, I suppose, decade or so has been that there used to be two main revenue sources. One is your loan income, and the other was investments. And obviously, everything that happened over the last 10 to 15 years, investments have just bottomed out entirely. So a challenge that credit unions have is that it's, essentially there's one source of revenue at the moment. So that's why I'm quite interested to hear about the business banking. But I'm just wondering, is there anything else that the Canadian credit unions are doing to try to generate a revenue source?
Yeah, so for sure there is. So when you look at the income statement of a credit union, there's income from lending, there's income from holding cash and cash equivalents, from investments. So there's lending income, and as you mentioned, Declan, like income from investments. But there's also non-lending or non-interest income as well, which credit unions try to provide. It's all about providing the needs of the member and helping them be successful, whether it's personal or business. But there are a number of sources of non-lending income that Canadian credit unions are having. One of the bigger ones is wealth management. Yeah. So what happened, I think, about 4 years ago is a very successful combination and consolidation in the Canadian credit union system in wealth management. So there used to be disparate entities that offered wealth management. So credit unions themselves would sometimes have their own proprietary credit union offer, but then there was a company called Credential, which was kind of a shared service model that would pool together, all the capabilities and other things that credit unions need, from regulations and other stuff, product manufacturing, different types of development. So there's Credential, and then there was an online trading entity called cuTrade. And then in Canada, what's unique about our cooperative system is that we have an Anglophone system and a Francophone system. Province of Quebec is being, almost 100% French speaking. They have Desjardins, which is a massive French speaking cooperative. So Desjardins came together and partnered with the Canadian credit union system, with Credential, with cuTrade. And we also had an ESG, I'm sure you're familiar with ESG investment arm as well, called NEI. In any case, the three of them came together and formed something called Aviso about 4 years ago, AVISO, Aviso. And so this has been a collaboration among credit unions across the country with Desjardins, the French-speaking cooperative credit union. And so it's been extremely successful, being able to provide better product offers, better experience, better technology. And I think it's been kind of at the right time as well. There's been really a proliferation in trading by Canadians. I think people around the world probably in the marketplace, but also just more holistic wealth management. So that's been a big source of non-interest, non-lending income. Other things would be payment services as well. Some credit unions will provide different types of services as well to some of their corporate or commercial, back to commercial clients in the area of foreign exchange, as an example. So foreign exchange is one that's growing. And at Concentra Bank, we partnered with a whole number of fintechs in order to be able to provide these services to credit unions that they can then use for their members. And one is a foreign exchange partner that we have is called TickTrade. TickTrade is a fintech that specializes in FX. So there are a number of things, and one model that a lot of financial managers or CFOs of credit unions here try to do is they try to get the non-lending income equal to the operating expenses to kind of cover that off, and then the profits come from lending.
Makes sense. Super. Just to switch slightly. Interested to understand how during the pandemic over the last year and a bit that we're all kind of tired enough of now, and hopefully we're coming out the other side. What way did Canadian credit unions adapt to that, or did they adapt, or could they have an opportunity to take advantage of a digital strategy or something that would help in terms of engagement with their members?
Yeah, so Declan, I think what we found in the credit union system and probably in business generally is that we experienced 5 years of digital innovation on a really accelerated basis. So it happened over a period of 6 months. And I think that, some credit unions were well prepared with their business continuity plans. Some had even done, draft scenario planning of a pandemic, the ones who are very prescient or fortunate, I guess. But a lot of others, weren't as well prepared. And so it was really a moment of truth and a time for people. I'm sure it was the same in Ireland we didn't want this to happen. We don't exactly know how this is going to play out, but we have to deal with it. And so I think there was a scurrying of people going to their homes to work who maybe hadn't before. And, first of all, trying to keep employees safe and be connected, and so they can still work. And then it was kind of turning focus to the member, the customer, and how do we serve their needs. So there's a lot of kind of very quick, kind of 72-hour innovations built up, and kind of a lax in some cases of some policies that were in place that were too encumbering in terms of what we could do. In the Canadian marketplace, the Canadian government has really provided massive amounts of stimulus, and so some contrarian outcomes have happened, some things that I don't know too many people who would have thought about. So with all this money, credit unions are flush with cash. And so one of their problems now is, what do they do with it? Because although the economy is still faring pretty well here, the pace of demand for credit, for mortgages or for commercial loans or leasing's another business that a number of credit unions do, by the way, and auto finance also. But there wasn't the demand, and so a lot of credit unions are sitting on excess cash on their balance sheet, which they can't really deploy in a meaningful way. In some cases, it's even causing a negative spread, so they're not making money from it. But I think what's happened is it's kind of shined a spotlight on the branch. So branches, we have extensive branch networks for credit unions in Canada, and those who have kind of a real focus, look at the profitability of credit unions, or they want those branches to get a return on investment. And what we're finding is that a lot of members don't go to the branch, and so when you look at, like, if you want to evaluate the branch, how successful is it? So there's different profitability models, but some of those belie the fact that the profitability from the branch is coming from deposits in business that was won 25 years ago. And so the member may have a lot of business, but they're not actually using the branch anymore. So I think there's a real there, and this happened before the pandemic, but there's a real consideration now of what's the strategic differentiator of the branch. So I personally think the branches are important, but I think that the way they'll be used will be different in the future. And so there's a lot of thinking about that. All around us in our lives, digital is now much more front and center than it was 15 months ago. I often work from home now. I live in Vancouver, British Columbia. Before the pandemic, I traveled a lot, but on multiple times a day, I'm getting a ding on the doorbell and there's a package dropped off. My kids will order, skip the dishes or food online. If I buy insurance, it's online. So the credit union system is really grappling with how do we really accelerate our digitization, Declan, and how do we get
Yeah.
the technology working?
So could you talk a little bit about a member of a credit union? Would they do all of their banking with the credit union, or do they tend to still have a bank account? And I suppose just in the vein of the digital strategy and trying to make sure that we're making it as convenient and accessible as possible. Do they tend to do everything with the credit union, or would they just do they might get their loan from the credit union, but they might do their current account, for example, could be with the bank?
So a lot of the market share, Canada has a population of 37 million, and about 22% of Canadians have their primary banking relationship with a credit union, but which is sizable, I think.
Yeah.
It varies by province. We have 10 provinces, 3 territories. Territories are relatively sparsely populated, but in the provinces, it depends which province. So Ontario, our biggest province, is the home of the big banks. And so that tends to be dominated by banks. You see those bank towers, and so many people are, taking the train and going to the banks. And so they're loyal to the banks. But as you get into the prairies, Saskatchewan, Manitoba, Alberta, there's a long memory of when, during the Depression, if you can go back that far, and other times, even recent times, where the banks have been very fickle and have pulled up stakes and left the town, but the credit union stayed. So there's much more loyalty there. So in and in British Columbia, where I live, there's a big credit union movement here with big credit unions. So I think that it depends on the region, but generally, Canadians have a share of wallet across many different financial institutions, banks and credit unions, but a sizable number, it will be their primary relationship will be with one credit union. We used to measure share of wallet, so we used to look at how many products do our members have with us, and 7 would be a good healthy number. Again, we were offering credit cards, lending, deposits, wealth management, a myriad number of things. So it is somewhat fragmented.
Yeah.
We're moving towards open banking in Canada. I know in the UK, open banking I think is already a reality. I'm not sure what the situation is in Ireland, but we think with open banking it'll be interesting what happens. There could potentially be more fragmentation potentially.
Be interested to talk about that maybe in a minute, because I'd like just to develop what's happening with open banking in Canada, because it's a big initiative this year over here, I would say. One of the questions though that I'd be interested in asking is, from a marketing perspective, how strong are the credit unions at marketing? And what I mean by that is, you've just done a public survey, so not just with members of credit unions, just the general public, and there is a lot of feedback, and I find this anecdotally anyway when I'm speaking with people who think that a credit union is still just savings and loans and that's it. How strong are the credit unions around marketing to make sure that, or what's their tactics, I suppose, to make sure that everybody understands what the credit union can actually offer?
Yeah, so with 240 credit unions in Canada, big ones, medium ones, and small ones, it really varies.
Sure.
So you'll have Van City and Coast Capital, which are, these very large credit unions that have significant dollar spend on different types of multimedia. They have great brand awareness, unaided brand awareness. So if you ask, a focus group, name a bank, name a credit union, they'll name them without even being aided. So really strong. Then you have, credit unions in some more, regional communities or somewhat rural or like outside of the big major centers like Kootenays and Saskatchewan in the prairies. The credit union there dominates for sure.
Okay.
When you move into some of the bigger, like Toronto, the greater Toronto area, again, home of the banks, as I mentioned a moment ago, there's been a real growth in the credit union market awareness, but traditionally, like if you went back 10 years ago, not as much. Market share was fairly skinny at that point. But I think the awareness, generally is pretty good. For certain credit unions, it's excellent. And also, what really benefits the credit union system is the community investment that they make. So credit unions will hear, like we're a Coast Capital Savings credit union where I worked, we were giving, investing 7% into community initiatives. So children's events, sports events, different festivals, scholarships, things like that. So 7% versus the banks, it was 1%. So pound for pound, it was pretty big. But there is an opportunity, I think, to increase the awareness in some areas for sure. Again, back in Quebec with Desjardins, it's massive. That's the #1 financial institution in a province of 8 million people. So they're there. They've been there since Desjardins was founded at 125 years ago by a man named Alphonse Desjardins, who had a vision of a cooperative banking system in Canada. And so it has deep roots in Canada for sure.
So I only have 2 more questions. I'd be glad to know, Don. Just to come back to the savings challenge the credit unions are having at the moment. Like, are they doing share caps, or are they doing? How are they mitigating against that risk?
Just to clarify, the risk of having too much cash.
Yeah.
Well, that's first of all, that's kind of a first world problem, a high class problem, because the opposite you wouldn't want, not having enough cash, because you go out of business. I think they're looking to different opportunities on where they can provide, lending, and so they're looking at product innovation. They're looking at things like that. They want to be a part of the wave that's kind of growing. So there's some product innovation. So I mentioned lending to small businesses through, often it's through partnerships with fintechs that have used, proprietary types of technology, artificial intelligence, machine learning, to be able to do, a better credit score. So they're looking there in lending. They're looking on the personal side at things like reverse mortgages. So in Canada, we have, more and more people getting to the age towards retirement. And I wouldn't say that we have an aging population. We have kind of multimodal. We have a lot of young people and a lot of people in retirement age. So a reverse mortgage, I'm not sure if you have those in Ireland, but
if you could just explain that, that'd be great.
Yeah. So what a reverse mortgage is you can, one typical scenario would be you're at retirement, you've got your house fully paid off, and you've got equity. And so you can take equity out of the house through a credit union or through a bank. And so say you have a 500 euro house, 500,000 euro house, you take out 200,000, and you don't actually have to ever pay it back until you sell your house. It grows, the liability grows, but the cash flow, from a cash flow perspective, there's no impact. You don't have to pay for it. So it's a product that, in the right situation, has significant advantages. There's traditionally only been one provider in Canada called Home Equity Bank, but credit unions are starting to get into this space as well. It's an interesting specialized product.
Yeah.
So we do First Nations lending in Canada. So we have about 11% of our population is First Nations. There's a number of specialized needs that they have for sure. There's protected. There's principal protected equity-linked GICs, or guaranteed investment certificates, or deposits. So deposit that your principal is 100% guaranteed, but you have some upside with the equity market. So those are popular for different people depending on their risk appetite. So Declan, there's a number of different product innovations and areas that credit unions are looking at, but largely, to be honest with you, it's kind of a wait and see, because there's so much stimulus in the Canadian market anyway. As we've seen significant, with low interest rates, high cash, and some expectations of inflation. We've seen asset prices increase of houses. We've seen, with people sticking at home, not able to go on trips abroad to beautiful places like Ireland, we are seeing people buy hot tubs and do home renovations and buy lots of toys so that they can sort of play and things like that. So we're seeing that happen. But from a credit perspective, Declan, a lot of it is kind of wait and see, because this won't stay forever.
Sure, absolutely, yeah. Last point for me, just if you could just briefly talk a little bit about open banking and what's happening there in Canada.
Yeah, so we are in Canada. We have a Royal Commission and different government initiatives working with the private sector to come up with the framework and the timelines of how to do it. For me, for credit unions and for mid-sized financial institutions, it's very exciting, because what it will theoretically and hopefully provide is the ability for members of credit unions to and members of banks. I think the opportunity is the big banks, people who are banking there who could, at least in the Canadian framework, could have better choice, could have better opportunities. It's now much easier for them to have control of their data, have access to their banking data, have transparency, and obviously done with, from an IT perspective, with full security, to be able to have this data and then move it around from different financial institutions. We're working on a trusted third-party framework, but what I think it will create, Declan, is the conditions to motivate and incentivize more innovation with more fintechs and credit unions.
Yeah.
You can then hopefully provide much more improved personal financial management tools and applications. I think it can help with better ways of doing lending. So I think, but in terms of where we're at, we're probably a couple of years away from it being launched and live and available. The credit union system and Concentra are spending a lot of time researching and investing in how we can be positioned to help our members be successful with it.
Super. Thanks for that update. Don, conscious of your time, it's been really informative so far. Emma, I'm just wondering, there's a few questions maybe that came in. Have you got a few more minutes, Don? Is that okay?
I do, yeah. I have lots of time for you. Absolutely.
Super. Thanks, Don. Appreciate it. Emma, I'm not sure if there's any questions that I think have come in the chat there.
Yes. Yep, there is, and feel free to keep them coming, or you can always unmute your mic as well. So the first question we have there is from Therese, and she said, for credit unions in Ireland, our balance sheets now have most of our income from loan interest. What is the breakdown for you? And she's interested to know about how much fees and charges of other income streams are part of your income.
Yeah, so I would say it's about 20 to 25% is non-lending income for the average Canadian credit union. So 75% NII, net interest income, and then 20 to 25% non-lending income.
And actually, Don, just on that point, sorry, one question. Sorry, I'm jumping in again. I'm sorry. Just fees and charges. Do the credit unions, is that something that has been avoided, or is it something that's being introduced, or in terms of like transactional charges and that kind of thing, or?
No, there's banking services. There's some credit unions will have free checking, some won't, but there's a number of ancillary charges, and there's different revenue sources like foreign exchange, and there's a whole sort of myriad of different services that add value that people are happy to pay for because it benefits them.
Sure.
But yeah, there's I mentioned wealth management, so I'm including wealth management in that 20 to 25%, and yeah, so foreign exchange, certain banking fees for sure. Sometimes when you do a lending transaction, if it's I talked about subdebt or mezzanine, more like different sort of business lending, there'll be a number of fees as well. At Concentra, we have in addition to our banking license, we have a trust company as well. The trust company charges custodial fees for different business. One of the things we do now is we provide custodial services for cryptocurrency companies. So cryptocurrency is really growing in the world and in Canada as well. And we have a proliferation of different service providers that are trying to provide a better user experience for people who want to buy cryptocurrency on their phone or trade it. There's also something called a stable coin, which is if you're not familiar with that, I'll explain it. It's like Bitcoin, except they're bespoke and unique currencies that are created and are not volatile against a currency. So they're pegged to the fiat 100%. And so people will use these just for the convenience without the upside or downside speculation. So we provide custodial services for some of these crypto providers, essentially, providing the trust that the credit unions have and banks have. We provide a custodial service to keep a record of all of that and to reconcile it for them. So that's another, I think what we try to do is really try to be prescient and think about not where is the economy today, not where are credit unions today, but where will it be 5 years from now? And there's going to be proliferation of new products. And I think that's really exciting for credit unions, all the opportunities that are afforded by that.
Totally agree. That's great. Thanks, Don. Sorry, Emma.
Not at all. Not at all.
I'll be quiet now.
No, Jack, I wouldn't have it any other way. So we have a question here. I think it's from David, actually. Hi, David. He said, hi, Don. What is the relationship with individual credit unions to Concentra Bank? Is the bank for credit unions only? There's a number of questions. And is your bank doing all of the credit union commercial and non-personal loans?
So the relationship, thanks for the questions, the relationship with our bank and the credit union system, first of all, we're owned 100% by the credit union system. So we, our profits, we pay dividends back to the credit unions. And since we were branded as Concentra in 2005, we paid dividends on common shares of over $90 million Canadian cumulatively. And then we also hold we have preferred shares that credit unions hold as well. And we paid about 26 million in those. So number one, we pay a financial return. Secondly, we're a wholesale services provider. So we will we'll provide a lot of products to credit unions that they can then resell or provide to their members. That includes some commercial banking products. It includes securitization. We have expertise in a lot of specialized areas that some credit unions maybe don't have. So the securitization of a mortgage where you can get more liquidity from your mortgage, which you're probably familiar with, we do that. We actually have an internal treasury and ALCO consulting practice, I guess you could say, where we assist credit unions with the running of their treasury, their ALCO committee. We do different stress testing for them. With our expertise, we do different services. So we do those types of things as well. So we offer a whole number of products. So that's the second way that we do that. I see the question continues, is the bank doing all credit union commercial? So we have business we do for credit unions, but we also do business outside of the credit union system as well. And it's more where we do business is more, it's adjacent to where we do business outside of the credit union system, it's adjacent to what credit unions do. And so in doing that, we can generate profits that we then distribute through as dividends to help credit unions. And we also will sometimes be doing business like reverse mortgages as an example, where it's something that credit unions don't largely do. And so we have that expertise. So we can provide those mortgages to non-credit union members, but also provide them to credit unions as well. So it's kind of a dual benefit there. Is the bank credit union owned? Yes, it is. There's a few, like of the 240 credit unions in Canada, there's just a handful. I could count on one hand how many own their own bank. So Van City owns a bank subsidiary. Meridian owns a bank. Who else? Alterna owns a bank. So some of these credit unions own a bank in their own right, but we're a bank that all the credit unions can essentially own. The credit union system is regulated provincially in Canada. We're a federal bank, and with being a federal bank, we have federal powers. So we have an investment grade rating with one of the largest external credit rating agencies. We have certain powers and strength and scale that we can then tap into, that the credit unions can tap into to benefit from. So it's kind of a nice asset to have, Concentra, so that we can help them be more successful.
Sure.
Thanks for that. We actually just, when you had mentioned about reverse mortgages there, we have a question from Therese around how does the reverse mortgage work if a parent bequeaths their house to a child?
Yeah, so generally, if there's an outstanding debt on the only time you have to pay the reverse mortgage back is on death or on sale of the property. So on death, there'd be a debt potentially that's been accumulated, and that would be have to be paid first. That would be senior to any claims from any beneficiaries. The way the reverse mortgage typically works is most people use it for a while, and then they pay it off. So the average, you have to be at least 55 years old in Canada to get a reverse mortgage. I think the average, generally, I think it's more like 65. People often, for different purposes, they will take out a reverse mortgage, use it for a while, and then repay it. But on death, the balance has to be repaid.
Super.
Okay, thanks for that. And then we've got two questions here, one from Brandon and Paul, and it's around the regulatory burden in Canada and the levels of regulation. How onerous are your reserves requirements? Do Canadian credit unions have to impose savings caps to avoid reserves issues?
So in Canada, we have two levels of regulation in the credit unions. We have two credit unions that are federal, and so they essentially follow the bank regulations. But generally, the banks in Canada, we're regulated by an entity called OSFI, the Office of the Superintendent of Financial Institutions. And OSFI prides itself on being a world-class regulator, which means that we're always at the leading edge in terms of new Basel adoptions. We're always making sure that we are having strong regulations so that there's safety and soundness in the system. Now, so there's a lot that's required to run a bank in Canada, a lot of capabilities in risk management, data requirements, and there's always additional asks. But I would say that it is principles based. So OSFI is not going to tell you how to run your bank, but they're going to expect you to have a risk appetite, to have a sophisticated governance framework. Yeah. They have guidelines and things like that. The provincial level of regulations is done more, across the provinces. It's not quite at that level, but they analogize. It's not quite at the same level in terms of the how onerous it is and how the requirements. But they do analogize. They look to OSFI, they look to Basel, and they'll adopt parts of it, but they don't go the whole way. So there's a perception in the marketplace that the regulations for credit unions are a notch below what they are for banks. I'm not going to comment on whether that's true or not, especially since you're recording this conversation. But that is a perception. But I think you just have to look at the strength, the performance of the credit union system in Canada to see that, these are well-run organizations. Any metrics of credit weakness are very, very low. So it's a strong, robust system. It's worked out well.
Good, super. I think, is there one last final question? I'm just conscious again of Don's time.
No, I actually, do you know what I did there, Dec? I combined 2 questions into one.
It's always efficient. Guys, just want to say, Don, thank you so much for that. It's been really informative and very helpful. Really appreciate the time that you've given us, and it's been very generous. So thank you so much. And it's nice to see that kind of credit union ethos, spreading across from Canada to Ireland, if you like.
Declan, thanks so much. Really, again, honored to join with you, and I wish everyone all the best and success, and would love to talk to you again about the credit union system.
Super. Don, thank you so much.
Thanks, everybody. Have a great day.
Bye-bye.
Bye-bye. Thanks.
Thanks so much, Don. Appreciate it.
Cheers. Bye-bye.
Bye.